everyone. My name is John Paul, DayTradeToWin.com, and what you're seeing here is the second trade of the day, this time to go long. I did a video earlier which showed the short trade at 1923.75, why I thought it was a good trade. I went through it, and as the day plays out here, looks like we're going to have a long opportunity on the Emini SP. What I have to wait for is 2 consecutive closes plotting above the Atlas line, which should put us about 1926, 1925.75. Around that area is a long entry. And then I have to manage the trade. So everything is playing out in front of me as you see it live. We just have to confirm 2 closes above the Atlas line, which we have right here. It happens to be 1926.25, and the entry would be to go long at 1926.25, most likely on this candle here. As that candle opens, this is a very objective way to go long or short. On any market, I'm using here the Emini SP. The same rules apply to the short trade. If you haven't seen the short trade, let me recommend you look at the YouTube video just prior to this one, or go into the videos page of DayTradeToWin, and you'll see how the short trade played out. So 1926.25, it magically appears, not really magic, it's based off of price action. I'm long at the moment. 2 consecutive closes give me that clear objective to go long. Now we have to manage the trade. I'd like to know my target. My target has to be based on the conditions. Here I look at the average true range, the ATR, which is plotted on the bottom part there of the chart. And if you haven't seen any of the videos where I explain the ATR or I show you exactly why it's important to know the current conditions, please, very important, review these videos either on YouTube or on the DayTradeToWin videos page. And so I know that if I go long here, my expectation isn't going to be 4 points or 5 points or 10 points. My expectation is based on what the current conditions have just done. Currently, it's 2.25 points. What can I expect out of the market? 2.25 points. You're looking at 9 ticks. Now let's say that the market does not move 9 ticks in my favor, and it starts to turn around, or I start to lose money on this trade. There has to be a way to protect ourselves. A one-stop criteria does not work. You have to have a combined stop strategy which will protect you if the market goes down, or if the market goes down in a large period of time, or if you have proof. So here are the stops that I use. I first use a catastrophic stop. If I go long and then there's a catastrophe in the world, I need something to protect myself. So I have to have a catastrophic stop. I also have to have a stop based on proof. So if there's something that tells me that the market is about to turn around, or some type of proof that tells me I should no longer be long, that's my proof. I need to get out of the trade with a small loss. Then you have the one that I prefer, and probably the one that gets hit most often, is a time-based stop. And the time-based stop is important because if I enter here long, specifically based off the Atlas line plot, I need to see an immediate result. 2 hours later, 3 hours later, an hour later, it's no longer relevant. So time, when it comes to trading any market, is essential. I'm entering long for a reason. I want to see an immediate result. If within the next 20-30 minutes this market does not move in my favor and hits the target of 2.25 points, which is again based off the current conditions the ATR is telling me, I need to be out of the trade wherever it may be. It may be a small loss, a small win, a break even, almost at the target, it doesn't matter. So a time-based stop, a catastrophic stop, a prove-it stop. There's another one that I teach as well with the strength and pullback trades. But right here, everything is laid out for me. So 1928.25 is a target. My prove-it stop happens to be a closing price on the opposite side of the Atlas line. That's my proof that I should no longer be long. It's going in my favor, and it's immediately going in my favor, which is great because I'd rather see this occur right away as opposed to 10 or 15 minutes later. It has to happen as soon as I enter long. And there it is. 1928 quarter was tagged. And I want to make sure that it goes through it. There we go. So it went through 1928 quarter to 1928.50. And I'm out of the trade. So this is a great day to represent a short opportunity using the Atlas Line software and a long opportunity based off the Atlas Line software. My name is John Paul. If you have any questions, email me at support@DayTradeToWin.com. I look forward to having you in the next class. I do include live training with the Atlas Line, so I want to make sure that you're clear on how to use this properly. Have a great day.